Vinit Sambre is with us, Head of Equities at DSP Mutual Fund. Vinit, good to have you with us here. Thank you very much for your time. A small break in the upward trajectory is what we had. But to be sure, momentum started seriously flagging in many mid-caps and small caps, down 15-20% very quickly. But what do you make of things now? The global scare, at least for now, seems to be behind us. You're kind of back to, the July kind of trading environment, more up and looking at what can go right rather than what can go wrong. So what does it mean for us here, Vinit?
So Prashant, good morning and thank you for having me on the show. So I think clearly, when we look at the Indian markets on the valuations, it's very clear that we are on a high range in terms of the valuations, and which is maybe the only risk. But as far as the fundamentals are concerned, we keep talking about the overall improving fundamentals. There could be blips in the interim, like we had this quarter which went by. We had seen some moderation, but there were reasons which we can talk about. But I think to your question, I would say that I think it is very volatile, as far as the environment is concerned globally. The news flows keep changing, and the views and the money which follows some of this news is huge. So one can change the views on a daily basis, but I would say that largely what we are thinking is as the US economy goes through cuts in the interest rate and it starts maybe recovering, that would give some kind of positive sentimental boost as far as the overall world markets are concerned. We are already trading at a high level. We should be careful. Should not sort of just maybe extrapolate the returns which one has seen over the last 2 to 3 years. Some kind of moderation we are seeing in the earnings, which is bringing some kind of caution in our minds as well from the valuations perspective.
Vinit, hi, good to have you on the show today. So I have to ask you about, I know you don't get into stock, but the theme of the day, right? Ola Electric, it's again brought a new company, a new business to the market, which has been loss-making, still is loss-making, but I think the market's willing to give it the benefit of doubt and trust the management, trust the market opportunity here. What are your own thoughts around EVs, the whole ecosystem? And I mean, if we get more listings here, a lot of the current OEMs, they're also expanding the EV portfolio, right? So what is your view around this? Would you be interested in more pure play, stand-up EV businesses?
So first of all, my congratulations to Bhavish for a very great start on Ola. And I think the company, the stock is really pricing in the excitement around the EV proportion as it grows. But I think that as I understand, electric two-wheelers clearly will be will be the first beneficiaries of the electrification in the automobile segment, is what I feel. At the same time, I also believe that the jury is still out in terms of who will gain what kind of market shares eventually, because we already have the existing ICE players who are deep-pocketed, and they have also entered the fray. So maybe a lot of clarity will emerge over the next 3 to 4 years as to what kind of market shares these players will eventually have and who will eventually come out to be a big winner. The second important factor which you mentioned is about the profitability in the current environment. While we have seen that the volumes are growing, but still the company is yet to maybe come up to the levels of breaking even. So I think it is important to assess at what levels will the company break even, because eventually profits is going to be the driving factor for the valuations as we move forward. So I would say that currently what we have thought about is we are sort of looking at the neutral players which are really in the auto ang space, which are serving both the ICE as well as the electric vehicles, and just participate in the growth opportunity for the overall auto category as such. So I think that is how we would like to sort of play as of now, and maybe watch the space, see the companies, see the visibility of these companies breaking even, and then maybe take a big call on such names.
The issue price, just to remind everybody, was 76 rupees. Today's price is 122, so that's already a 60% pop for whoever got the allotment and whoever was willing to write this one.
I'll tell you one more thing.
Yeah.
If you remember, there were all these reports which were suggesting that when the IPO was being sort of negotiations were going on, that Bhavish wanted wanted to value the company at about $7 billion. I mean, that was I think there was an article or two as well. Finally, the IPO came at $4 billion, right? So there was obviously a lot of back and forth, etc. Guess what the market cap today is?
7, 8.
6.6,
He's almost there.
almost $7 billion in 3 or 4 days. So, you know.
That's what they say, right? You do your business, the market will give you a valuation.
Market will give you, and if you leave something on the table,
Yeah.
I mean, the market rewards you.
Yeah.
And I think you're right back there.
Okay, all right, interesting. Well, Vinit, good morning and always good to see you. When do you expect us but to be bracing on the headline index for a bit of a time-wise correction? I think you were briefly alluded to that earlier. And I think the top sector that you believe that in terms of valuation comfort and how things are poised, I think it was the Nifty bank, the banking names. Is that still the top sector you like?
So, Nigel, I still feel that maybe we should see some kind of consolidation ahead as far as the markets are concerned. And really, what I was trying to allude towards the first quarter numbers, which went by, we have seen some kind of moderation which has happened. Now, there are reasons which the corporates are assigning to maybe election quarter. We had all these freight issues which has hurt. So it will be important to maybe look at the quarters ahead if they are sort of recovering back, and which is going to be important factor and maybe the trigger for the markets to sustain the rally or the momentum. But I think till such time we should be in a range bound kind of a outlook for the markets. In terms of the segments, I think again a lot of these data points are coming out as these companies have announced the numbers, and I see that the trends in terms of the growth could change a bit from what we had seen in the past, and I would say that some of the segments which are linked to the low income household or the mid income household, they are showing some signs of recovery. And from that perspective, all these companies into two-wheelers, agri, consumers, consumer durables, I think these are the ones where incremental money could be allocated. While we all know the valuations are not very comfortable, but I think at least the money should get aligned to where we see recovery happening or the visibility or the growth sustaining as far as the businesses are concerned. And I would imagine that these are the ones where we see the growth trends sort of improving. On the banking front, Nigel, banking is the only sector which is maybe trading at valuations which are lower than the 5 years average. And from that perspective, it makes sense just from the valuation perspective. But I also feel that incrementally what is happening in the banking sector would also mean that there are lack of catalyst for them to see strong up move. And when I say that, what I mean is that the NIMs maybe are under pressure, the delinquency is incrementally sort of rising. So I think those trends will mean that the banking stocks, while they are cheap, they will require more catalyst for them to sort of see, up move.
Vinit, pharma, what's your view? There are some news reports, and we'll sort of go into some details with this with our colleague Ekta, who tracks the space closely. But there are some news reports which suggest that under the Inflation Control Act in the US, starting January of 2026, prices for some of the top blockbuster drugs are being brought down dramatically. Now, of course, these are sort of patented drugs by innovator companies out there in the US. But there is some concern that down the value chain, could there be an impact on generic companies as well? I don't know if you've seen some of this, but just your thoughts.
So, Prashant, I've not seen this particular news, but let me say that, when, most of these economies, or I think globally, the governments are interested in bringing down the overall healthcare cost, and which are generally very high, and especially in the US markets, because the patented products there, they start at a very high price points. But I think from that perspective, we stand slightly more beneficiary because we are supplying generic drugs to them. And basically, we are also sort of supporting their cause of maybe bringing down the cost of medicine, which I think Indian companies have great strength, and they have proven themselves. And also, just coming out again from the first quarter commentaries from most of the management, I think most of them have spoken about the price decline getting arrested now as far as the generic molecules are concerned. So from that perspective, I would say that the US markets as such for our Indian companies today is standing on a good note, and maybe it sustains over the next 1 or 2 years or even years ahead. On that account, I would say the pharma sector for us looks okay. While the valuations there also have now run up, and it's not cheap as it used to be 1 year back. But maybe we are selectively looking at options. In US, I think they are also looking at the act on the biosimilars and all that. So maybe that also helps some of the CDMO players, which is also one of the areas which we are focusing on.
All right, Vinit, thank you very much. Good to have you on today and get all that perspective on the market.